If you're watching this right now, understand that this is the calm before the storm. I've been in crypto for nearly a decade, and I've seen this exact setup play out again and again. 87% of the population has no idea that rate cuts are happening tomorrow. Your parents don't know. Your friends don't know. But when they hit, Bitcoin, Ethereum, Solana, XRP, Cardano, and many other quality altcoins will explode. Get ready for the best Q4 crypto has ever seen. Better than 2021. Better than 2017. Smash that like button and subscribe to Kalen Moss. We bring you crypto videos just like this. Wall Street veteran Tom Lee just gave his updated Q4 outlook on CNBC.
Bitcoin and Ethereum, I think they could make a monster move in the next 3 months, like huge.
If we were to say Ethereum, Bitcoin, we try to bucket them into risk-averse assets or risk-on type assets.
Yeah.
Is it fair to look at them that way? We used to compare them correlation-wise to the NASDAQ 100. Is that the fair assessment for how these things trade in the coming months?
Yes. Bitcoin is particularly monetary policy liquidity sensitive. Ethereum has elements of being sensitive to liquidity, but it's also part of this AI moving onto the blockchain and Wall Street moving onto the blockchain and that whole stablecoin ChatGPT moment for crypto. So Ethereum, I think, trades almost like 1971 Wall Street, which was the dollar went off the gold standard, a lot of innovation. Ethereum essentially is a growth protocol, and that's why Bitmine is so aggressively acquiring Ethereum.
Tom Lee is absolutely perfecting his Ethereum pitch. Whether you agree with it or not, the way he's framing it helps people understand its significance, and it's a huge change compared to how mainstream media used to talk about ETH.
Has elements of being sensitive to liquidity, but it's also part of this AI moving onto the blockchain and Wall Street moving onto the blockchain and that whole stablecoin ChatGPT moment for crypto. So Ethereum, I think, trades almost like 1971 Wall Street, which was the dollar went off the gold standard, a lot of innovation. Ethereum essentially is a growth protocol, and that's why Bitmine is so aggressively acquiring Ethereum.
Yes, volatility is expected on the news, but in my opinion, every dip is a buying opportunity. Too much is happening in crypto right now. Polkadot, the DOT community officially voted to lock supply, creating a 2.1B hard cap. Big move. But is DOT still a real contender? Share your thoughts. Solana, stablecoin inflows are exploding, very bullish. Ethereum is my top pick, but don't get it twisted. Both ETH and SOL will thrive in this cycle. Dogecoin, clean core Dogecoin treasury just added 100 mDoge, bringing its total to 600 mDoge. Makes me wonder, will Elon Musk get more involved again? Stablecoins, Bank of America and other major financial institutions are going all in on stablecoins. Why? Because of the newly passed stablecoin bill. When the market clarity bill passes in a couple months, expect adoption of Bitcoin and Ethereum just like we're seeing with stablecoins. Bitwise is front-running this wave, filing for stablecoin and tokenization ETFs. Their CIO, Matt Hogan, revealed that even sovereign wealth funds are now front-running the US in buying Bitcoin. The takeaway? Bitcoin hitting $1 million is not hype, it's reality. Bitcoin is set to disrupt the $20T gold market. It's on track to be used for international cross-border payments.
I had a conversation with a sovereign that was interested in the ETF because they wanted to get ahead of the US buying it. And it was just a faster, easier button. I do think they'll end up buying both. If you look at the gold market, for instance, that's what you see. People own gold ETFs and they own gold bars. The same thing is going to be true here in crypto. So I think it's probably more likely that more sovereigns are going direct, but you'll definitely see more than one take the ETP route. It's just incredibly convenient, incredibly low cost, and allows you to execute very quickly without having to set up the custody side of the business.
Divide those massive markets by Bitcoin's fixed supply, and you see why Bitwise projects BTC over $1 million by 2029. On a shorter term basis, it's simple supply and demand.
My favorite view of the value of Bitcoin on a long-term basis is to look at the size of the market it's going after. I think Bitcoin is well on its way to disrupting gold. That's a $20 trillion market. I think it's going to be used for international transaction and cross-border transactions. That's another many trillion-dollar market. And then you can divide that by the number of Bitcoin and you end up with a target amount. At Bitwise, we think it's going to cross $1 million by 2029. I think from a shorter-term perspective, you can just look at supply and demand in the market. Right? The big criticism of Bitcoin is the price is set by supply and demand. But that's also a real benefit when you're in a market like today, where again, we're producing 160,000 Bitcoin a year and ETFs are buying 500,000. Right? Something has to give. And I think what gives is price resistance and ultimately it goes higher.
I think every pension fund should be allocated to Bitcoin. When I was a reporter, I covered just how so many of these pension funds are essentially underwater. It's so sad. But I heard actually, and I'm curious if you could tell me if this is true, that let's say there's a pension fund interested in allocating to Bitcoin. They actually have to go out and meet with a consultant for the consultant to do due diligence on Bitcoin. And that could take months and months. And if the consultant says, no, you shouldn't invest in it, then they just pass on it. Is that true? Are there gatekeepers?
It's mostly true. Yeah. So, I mean, the deep institutional investor market is a market with tier after tier after tier, because those people want their jobs. And if it goes wrong, they want someone to point at and say it was their fault. That said, we've been working with a number of consultants for a significant number of years, and many of them are already allocating. That's why you're starting to see this bubble up through the end. I'll add one more thought from an institutional perspective, because I think people overlook it. Crypto's a $3 trillion market right now. If you have a 0% allocation to crypto, you're effectively short. Right? When we talk about people allocating 1 or 2% to Bitcoin, that's just to get to neutral. And I think institutions are starting to recognize that. Once you accept it as part of this pie, you need to have at least a little bit, or you're making an active bet against it. And they're not comfortable doing that either. So I think you're going to see this 1-2% thing really take off at the institutional level over the next few years.
I'm Colin, and I truly believe the best years of crypto are still ahead. See you soon, my friends.